Good evening, everybody. Yeah, I've got some dead spots on my computer screens. And when I call my computer guy to come out and do the home fixing, every time it's about ready to come out, everything seems to work. And now it's bad again. So, all right. Well, it changes, Jay. Um, Today everything was working right up until I started try to move some screens around, and it quit working. So. Anyways, tonight we're kind of going into the logic. We're going to be doing the mini spotlight training session on the new rare trading program that we're kind of instigating. And it's so simple that it's only going to take about an hour to show it. But again, rare is that research analysis reverse engineering. And where it's working effectively right now is in the biotechs and the electric vehicles. Now, I'm using electric vehicles as a term to include all alternative energy vehicles right now. So we're using rare to find what's making something pop. Yeah, Keith, I've got it. We've got 58 stocks on it right now, which are strictly the electric vehicle stocks, and we're going to figure out how to get it to everybody. And so I don't know what to how to do that just yet. And it might be just as simple as just making a list and send it through everybody's email on just a Word, and everybody have to copy it back into their own scanning softwares. On the website and post a link here. There you go, Jay. All right. Yeah, I'll have to figure that out. That's all high tech stuff for me. All right, I'll figure out how to do it. So this is what we're looking for, things that are starting to break out. Now, what you might have seen here in the last for the last week or two, I'll figure out how to get it to everybody. That'll be my project tomorrow. But what we've seen is these type of situations. IPWR, which we started going after here, was up 48%. Now, it's been a long time, like back in the year 2000, 2001, when you started seeing gains like this in specific stocks. Yeah, with all my spare time, that's right. So this is what we're kind of looking for. Here's the patterns. This look familiar? There's your fry pan bottom. There's your gap up. There's your continuation. Looks just like that. So this is why we want to recognize what the strong patterns are and what instigates the buying or instigates setting up for a strong trade is essentially is what patterns are setting up for us. Let's see. Okay, Steve, I will try to do that. So anyways, this is what we're looking for right now. And what's happening right now, this is why we always kind of come back to what is the nature of the market. And essentially the nature of the market is that the small cap stocks are getting a lot of attention, and you're seeing price moves like this. And you're seeing it mostly in the electric vehicle area, as well as, it's way too far away now to be buying. So the whole point of this is what is setting up for that type of situation. So you're not necessarily buying here. You're hopefully in the position and then figuring out when to take profits. So what we're trying to recognize at this point is which sectors, which stocks, and which patterns are getting the most attention. One of the things that was very evident today was the fact that the stocks that already had good, strong charts were getting even stronger. So kind of the candlestick logic is we can see exactly when it's time to get into the trades for these strong price moves. And then we can see what type of signals are telling us it might be time to start thinking about taking profits. As we see in Sunworks today, a long-legged doji. Makes our trading strategy very simple. If this opens lower tomorrow, it's time to start taking profits. Why? Because over the last 400 years, the Japanese rice traders have told us you see a doji, especially a long-legged doji, in the overbought condition, and they open it lower, the direction has changed. We're looking for the information that tells us what should we expect coming out of here. We're expecting more upside. So essentially this is putting us in situations where the probabilities are going to be extremely strong that we're in the right direction or the right position at the right time. You got stopped out of bingo when it traded back below the open. All right. Apple is also a long-legged doji. I don't know whether I put it in here or not, but we'll be looking at Apple here pretty soon. So anyways, this is what we're looking for, is the alerts that tell us when it's time to get in. Yes, WWR is metals and mining, but it makes the graphite for batteries. So I include that in the kind of the whole electric vehicle sector. So what we're looking for is the high probability trades. What's our expectation? This one gapped up and did a doji. What do we know about the doji? If it opens positive, we got a doji sandwich, which is telling us our shade hook pattern is working. Same thing with Fugo or Fubo. Good option trade setups in that it pretty much tells us if this opens positive, this pattern is setting up for hopefully another good run. So this is what allows us to analyze with an extremely high degree of accuracy where to be putting our trade funds. Tom, yes. And that's what we're going to go over on this weekend because of the different strategies that there's going to be some things that are going to be working long term but also short-term trades, depending on what your trade setup or your trade nature is. For example, Blink is something that we're holding on to because we anticipate it not coming out of or even though it's below the T line, it's still in a long-term trend. Carry, it's up to each individual. This is up to each individual. I'm just saying that it is a good option trade setup. So a lot of people ask, which ones do you buy options on? Which ones do you buy stock? Well, if I'm buying for my stock accounts, I'm buying stock. If I'm trading the options on it, I'm trading in my options account. So it's not that one is better for option trading versus stock trading. It all depends on what you're trading. So, but for option traders, these are good, excellent setups because if this opens positive, we know we can have another magnitude move of this. So you're getting in early. It allows, so what this boils down to is it allows us to see exactly where a high probability trade setup is in effect, meaning if this opens positive tomorrow, we can anticipate another price move like this. So it's just letting us see which ones are, which trades are heading in the right direction. Why do you buy both stock and options in the same stock? Because I'm buying stock for the stock accounts and I'm buying options for the options accounts. So again, it's not because you're buying stock and it's only stock or options. It depends on what accounts you're trading. There's a lot of times where I'll have the stock in one account and I'm trading options in another account. Maybe the stock is a little bit more longer term where the options might be more short-term trades. Marshall, yes. So this is what we're trying to do with the what I call the common sense built into candlestick analysis. That if we see trade setups, for example, if Zoom opens positive tomorrow, we're going to be buying it. Now, obviously, I'm going to be buying the options. I'm probably not going to be buying a $400 stock. And why? Because if this opens positive, it's going to move positive, the doji rule. And number two, it's given us a bobble breakout. What do we expect from a bobble breakout? A high probability of a good, strong price move. Same scenario over here on ALEC. Failed at the 200, pulled back to the T-line, came back up. If this comes up through, what do we got going on? Kind of your classic pattern breakout with the through the 200. Now, why is the bobble breakout a little bit more dynamic than just a J-hook pattern? Because if you essentially took out the 200, you still have kind of a J-hook pattern. Not kind of, you do have a J-hook pattern. But what makes it more resilient as a bobble breakout than just a J-hook pattern? Because you can bet your dime to donuts that everybody and their brother is watching to see what is happening at the 200 to see if it's going to break out or not. If it does, they're all stepping in to buy. What makes it more effective for us? The fact that we can see that it didn't fail or couldn't get back below the T-line and they started it back up. So this is what we're going to kind of be concentrating on this coming weekend, is using the rare trade setup or the rare research analysis and see why a stock price is moving. Okay, so with that, I'm going to try to do this elegantly without goofing up too bad. See if I can do this. Okay, is that set up all right, Jim? Okay, so kind of a funky market this morning. The Dow was selling off hard from the get-go, and so many energy stocks jayhooking, it seems. Yes, so when that, Matthew, that should tell you something, which obviously tells you that those are being bought again across the board. So it's when you can see a whole sector or a bunch of stocks in the same sector doing the same patterns, it basically adds credibility to the fact that those stocks are being bought, and it's just not one that's getting kind of a fluky buy that is adding more credibility that they're buying that whole sector across the board. So putting all your stars in alignment basically boils down to if you can see what direction the overall market is moving, and you can analyze which sectors are acting the strongest in that market trend, and you can analyze which stocks in that sector are acting the strongest. Now you've kind of put all the probabilities in your favor that things are moving in that sector the way they should. So the Dow came right back up. It closed just slightly below the T line, but notice the nature of this market. Pretty indecisive. Now, over here on the NASDAQ, that's a little bit more compelling in the sense that today they even came back down and used the T line as support. Is this a hanging man? It could be. But right now, we don't have any evidence that there's selling yet, that the uptrend is still in progress. But more importantly, this is also a strong indicator. The oh yeah, hold on, I'll put that in. Somebody wants the link for Saturday. There's the link for Saturday. It's one of our mini courses. But the Russell 2000 stocks are still acting, not only acting well, but the small cap stocks are producing the best profits at this point, which kind of fits in with the idea that all this stimulus money is probably going to be directed more to small companies. But the small companies right now in an economic environment where specific sectors, for example, the alternative energy vehicles are getting a lot more attention. The small companies are the ones that are getting a lot of investment in that area. Let's see. So where do I want to start here? I'm thinking. All right. Let's take a look at the ones we recommended this morning. This one was recommended on positive trading, and a lot of stocks came out of the chute today pretty positive, but backed off. So a lot of people say, well, is that bad? Well, you got to remember, the reason we were buying this was based upon this pattern and the results that created that pattern, which was in this case was kind of a doji sandwich. So when it opened positive, and it wasn't the best entry just by happenstance, the hold on now. This is getting screwed up. You still have to do the analysis of what the chart is telling you. The chart is telling us this is still a fry pan bottom. They haven't closed below the T line. It didn't do well after you bought it up here, but it didn't change the course of that chart pattern. Let's see. But XL, we're going to buy this one today on positive trading, but it didn't execute because it opened lower and continued to trade lower. So this would have kept us out of this trade. Is this still a bad trade? Yeah, it didn't execute today, but if it comes back up through this level, what's it basically telling us? That this best friend signal is still working. You can buy it at that point. So just because a trade doesn't execute doesn't necessarily mean that it still isn't a good trade to get into when it does start showing so it's up after hours. Okay. All right, so it's back up in this range. So that might mean, yes, it's time to start looking that you could start buying. Brad, that's step number 2. I got out of it today also because it didn't look good. And when would you buy it back? When it looks good. So not every trade is going to be the perfect entry, or not every trade is going to be getting in and having it immediately go in the direction. Sometimes I get bumped out of that trade, and then I come back and it's doing what it's supposed to. You buy it back again. Because we bought it, the doji wasn't the buy signal. This candle was the buy signal. This was confirming that the bulls had stepped in. So what do we want to see? We want to see the bulls are still in control. But if they're closing it back below the candle that told us the bulls are in control, close out the position. This is one of the hardest things I had to learn for myself, is if I buy something, but then it doesn't work, now I'm sitting there thinking, all right, what is this going to do? I don't know whether it's going this way, or this way. I knew that if it opened positive, it was going to go this way. So now I don't know what to do, so I close it out. I'd rather have that money where I can go find something where the probabilities are greatly in my favor versus sitting in something that's not working, hoping that it's going to go back the way I thought it was supposed to go. Okay, let's zip along here. What was this one? Oh, BNGO. Again, this one's been very profitable ever since it kind of did a breakout from this level. So you're up 60, 70% on this one. If you bought the options, you're up even greater. PGEN didn't do what it was supposed to today. It was trading down here. I was ready to close out the position. We stopped out of some right here. I was ready to close out this position if it closed down here, because that would have told you it's not going anywhere. Now it looks pretty much like if it opens positive, you still got a strong price move. All right, Steve, I'll try to get that to you. Yeah, so if you got out of PGEN today, no big deal. It wasn't working well. Now, if it opens positive and starts trading positive, now what can we make as an assessment? A best friend signal, a belt hold signal, a hanging or a hammer signal, stochastic's coming up. If it starts trading positive, what's it telling us? All this buying is now kicked in. You buy it back. Phil, hold on to your individual ones until I get done here. Is going slower than I expected. So not only does the signals tell us when to get in, signals tell us when it's time to probably take some profits. And what's one of our top reversal signals? A gap up doji in the overbought condition. If this starts trading lower tomorrow, what do we do? We start taking profits, because where do you think it's going to come back to? The T-line. Same scenario as we illustrated earlier. When was it time to be buying? Now we got a long-legged doji. If this opens lower, look how far away we've moved from the T-line. That's probably some profit taking. Why would we have profit taking? Because this stock's gone from 5 to 25 in 3 weeks. And there was another one. Oh, SPWR. We have some good profits in this one. But another long-legged doji. Doji rule. If this opens lower tomorrow, probably time to start taking profits. So this isn't rocket science. This is just identifying the charts or the chart patterns that the Japanese race traders have told us this is what's happened for hundreds of years, what happens in human nature. We're looking at fuel cell. Hasn't been able to close below the T-line. If it opens positive, what do we got going on? Another J-hook pattern in an uptrend. Gilt, yapping up. We're up in the overbought area. Where's our safety stop? Right here. If it comes back through that level, things are not looking good in Mud City. So we're watching what happens at the T-line. There's another J-hook pattern setting up in clean energy. CBAT, look where it used, again, when I say look what it used as a support level, that is to emphasize the fact that nobody has the T-line on their chart. So when it uses the T-line as a support level that nobody has, it's kind of identifying for us that that's a natural support level of human nature. So longer term holds, whoops. Watching Blink. Tried to climb up today. If it opens positive and trades positive tomorrow, we can assume this uptrend remains in progress. This is kind of one of the ones that we're setting on a long-term hold basis because of the fact that it's staying above the T-line and staying well above the other moving averages. XP EV, kind of the same scenario. Let's make this smaller. As long as this stays above the T-line, your fry pan bottom is still in progress. And NIO didn't show a lot of energy today, but it's still setting this up. This fact that they've have above the T-line, it's in an uptrend, and it's still long-term hold as far as there's no real selling going on in this one. Let's see, we did Alex and FOBU. FUV, with that breakout, Doji came back and consolidated to the T-line that if this opens positive, it's probably a good uptrend in progress. Is NIO a dark cloud? The answer is it could be, but why would it not be considered a dark cloud? Where is it occurring in the trend? Your stochastics are heading down, and you're not at the top of a trend. That's just a down day and an uptrend. So remember, a signal is not a signal if it's not occurring at the right conditions of the trend. Oops, hold on. This darn screens are just. Okay, that's it. All right, that's moving. That's right. I got to kick this thing every now and then. All right, so we've got long-term holds, like in lithium, because it's hugging the T-line. And it probably has prospects for more activity going in the future. So how long do we hold this one? Right now, probably until we see a strong sell signal and a definite close below the T-line. Ballard Power, same scenario. As long as it stays above the T-line right now, you can stay long. Now, it did a bearish Harami, stayed above the T-line, but it did a bearish Harami right here. This puts it in a little bit in danger zone, meaning it better not close below the T-line at this point. If it does, close out the position. You can always buy it back on the next buy signal. We took profits in NetTease because we were buying the calls right in here and had tremendous profits in it today. So now what's the next strategy? Well, it almost looks like wave 1 and wave 3 are about the same. So the rhetorical question is, well, do we try to buy it back on strength? The answer is, would that be the best place to be buying, or should we be out looking for another chart that looks like this? So the reason we were in this in the first place was to make a profit, not to try to maximize it, squeezing out to the last drop. That if this tells us the probabilities are starting to go against us a little bit, let's go find something that has better probabilities. Let's see. That was NetTease. DQ that's kind of your McMuffin J-hook pattern. McMuffin is your morning star signal followed by a doji sandwich or your morning sandwich. Right now we're staying long, but now we have a long-legged doji spinning top in the overbought condition. Our safety stop is right here. So are we trying to buy at the absolute bottom and sell at the absolute top? No, we're trying to get that fat, high probability part in the middle. On a longer hold, what you can use, and that's what we're going to try to investigate or go through on Saturday, is if you're going to hold something longer term, what else do you use instead of just the T-line? Obviously, the T-line is a very short-term trading mechanism. Maybe it is the 20 or the 34 or the 50. So that's what we're going to try to investigate. And that'll also be a function of what is the 34, the 20, the 50, what have they done in the past? Is that where support is being demonstrated? Let me see if I can find something that would. Here's the one. That as long as it stayed above the 50, it was in an uptrend. FedEx until it closed below the 50. That may have said your long-term hold you might want to start coming out of and get ready to buy it back the next time it comes back up through the 50. Tuffin, now that's got a bearish engulfing signal. There was a shooting star. Remember when you see a gap up in the overbought condition, what do you want to start watching for? Let's start watching for selling. Well, it hasn't confirmed any selling yet, but a good logical place to put a stop is just below the T-line. If it comes down through there after this kind of gap up, sell signal, that's telling you the bears are starting to take control. The probabilities are going against you. Close it out and go find something like this or something like this. So real quick out of the biggies, Tesla supported here. Looks like it's got the potential of another run. And Apple did a long-legged doji up here. But the thing that might tell you it's not the top yet is the fact you're not in the overbought area. However, if it does start trading lower tomorrow, you can probably take some profits or take some off the table and then wait to see when the next buying steps in. Oh, both Apple and Tesla have their earnings on the 27th? All right. Okay, so, whoops. There's your McMuffin. There's your Morningstar signal, kind of your doji sandwich. On off the 34 up through the T-line. What do we expect out of a McMuffin? Well, if we know a Morningstar signal is a candlestick reversal signal, if it confirms, that's a high probability there's been a reversal. We know that a doji sandwich is usually an indication there's going to be more upside. So when you have a Morningstar signal followed by a doji sandwich, that's just kind of double evidence that there's probably going to be more upside. Go-go. This is your classic pattern. Fry pan bottom, J-hook pattern. Oops, that's just your fry pan bottom. I was trying to find another one to illustrate. Woozy. There's your fry pan bottom breakout. Now, remember why we kind of advocate oh, is that right? All right. What makes this a good trade? Because a pattern has two benefits to it. Actually, three benefits. One, gives you a high probability which direction it's going to go. Two, the magnitude of the move is usually much greater than just merely uptrending stocks in an uptrend. And three, if all of a sudden the market took a strong reversal, a pattern which is basically a buildup of investor sentiment usually takes a little bit longer for it to roll over. It gives you a little bit more time to come out of the position profitably. AMTX. That's what you expect coming out of a fry pan bottom. Now we kind of look for a 45 degree on this one. And why is it less, whoops, did I do that wrong? I did that wrong. Why is it less scary to buy these? Because right now, whatever seems to be breaking out gets a lot of follow through. And DCLI, there's a fry pan bottom, and look where it's breaking out. Right about where the pattern started, and this is your 2+2 analysis. It's breaking through the 50. where do you think everybody's watching? They're watching to see what happens at the 50, and look at all the empty space you have up here. A good possibility this could run right up to the 200-day moving average. So this is Brainstorm Cell Therapeutics. Once again, just putting you in situations where the you're putting yourself in the positions in the right place at the right time. I'm going to skip to Ford. Ford, as you can see, had a nice reversal right here off the 50 because they're talking that they're getting more heavy into electric vehicles. GM, the same thing. Now, the reason I'm bringing this up is, electric vehicles, good upside potential. However, you got to take a look at what happens to the competition, that if you're an electric vehicle manufacturer just getting started up, now all of a sudden the biggies like Ford and GM decided they're getting into the business. That's going to affect your future as far as share of the market, which obviously is going to affect what your stock price might be doing. So it's not a case of every electric vehicle stock is going to keep going up, because just like any new innovation in any industry, somebody might come up with a better mousetrap and leave others in the dust. GM and Ford have been lagging, yes, because they had their industry already. But now, if Ford and GM decide to get into the business with research going into technology, they don't have to now come up with a manufacturing plan because they've already got all their manufacturing in place. They're just going to slide it into their manufacturing. So those getting into the business can affect a lot of the other stock prices. And this is what the whole point of having the reverse engineering research, to see if somebody comes up with a good idea, what's it doing to the other stocks? Is that put them out in front, or is that knocking down other stocks because of the new competition? Let's see. Pets was an example of what we call a column reversal. You can see the column. You can see the column. You can also see that it's kind of a scoop pattern. So I'd look for a slingshot effect off of this one. Will Duracell make cars? Probably not, but they might have a lot to do with the batteries that go in the cars. So this is why being able to analyze what's happening at specific levels, beyond meat, you can see the J-hook pattern right smack dab off the 50. Now, what advantage do we have visually to see what's happening here? Because as soon as we could see that it was supporting at the 50, and this was I was lazy last night because of the darn football game. I was going to put out a option strategy that you could be buying some spreads on this one if it opened positive. Because think of what, no, that's not so much a scoop as it is just a J-hook pattern. But think of what the psychology is when everybody that is watching the stock sees that it's supporting at the 50. What are they thinking? Oh, it's supporting. It's staying strong. They start jumping in. That little pattern right there, that little evening star or morning star signal telling us they were supporting at the 50, was a good indication that if they'd open positive, everybody was going to start piling in. So that's a major advantage you have when you can see a signal at a support level and understand what everybody else's reaction is going to be to it. Now this one, unfortunately, I sold a bunch of this earlier. This had to have been some sort of short covering squeeze going on. The stock that opened at 75 went to 150 and backed off. Yeesh. That was a giant squeeze. So that's why it's always good to see that as long as you're staying above the T line, you can stay with a position. And that's an example. Let's see if we can catch it on the 10-minute chart. That was it. This is why when you go to the 10-minute chart, that's the 5-minute chart. I'm guessing that was it. When you saw that shooting star in your 10-minute chart that far away, or up in the overbought area that far away, that would have told you, yeah, let's start taking profits. AXDX, this is where you go to your reverse engineering, go and see what the announcement was today that caused that price move. Especially after your little gap up doji, or your doji gap up, expect a 45 degree. Now at least you have something you can hang your hat on, that you could be buying spreads, but you can basically, knowing that the probabilities are if they open this positive, it's going to move like this, you can figure out different option strategies that would work well with that price move. EQ, same scenario. Fry pan bottom breakout. So again, we're essentially looking for things that are telling us the probabilities are much greater in our favor when we see a breakout, especially in these market conditions. DXRT, same scenario. Look at our slow curve. What do we expect coming out of a slow curve, especially coming through a resistance level? This is one of your strongest trade setups, is that slow curve that that gives you an explosive move to the upside. And one more, Revlon. Same scenario. Hammer gap up through the 50, through the T line, through the 34. Start watching, especially if this can get up here and, well, maybe it did break out through that downtrend. A slow curve looks like a very slow curve. Came up, just kind of slow curve, back up again. Part of your J-hook type pattern. And usually a slow curve, in this case you can see it wasn't a strong J-hook because there wasn't a big strong move, but you had started getting this slow curve type setup. Is already up, all right. Yeah, so is this bad? Well, they just gapped it up. What can this be considered? Profit taking. So if you see it open positive and trade positive, what's it telling you? That the profit taking is probably over. You can still be buying it. Yes, and that's setting up right now. You can see what's happening right here on this slow curve that's about ready to break out. You had a doji sandwich. So if this started trading positive, you've got not only a possibility of an uptrend, but a very strong uptrend. Okay, that's about all I've got for tonight. The thing that is in process right now, as far as the market conditions, is things that are acting strong keep getting stronger. So there's no investor sentiment or bearish investor sentiment currently in this market that's real compelling, especially in the small cap stocks. So this is where you get a much better read, knowing which areas are moving strong, and then being able to go to those areas and find which stocks are going to move the best. So with that, are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And then, whoops, in 3, well, I can't even scroll down fast enough. And now in 1.8 seconds, do the next double line. All right, we'll try to go through these quickly. UMC, stay long. You're still above the T line, but notice this is what you call 2 dark crows, which is a sell signal. They opened it here, traded lower. They gapped it up again, right about the same level, and traded it lower. This one, you get ready to take profits if it opens lower tomorrow. FUV, I would be ready to buy this one on positive trading. NNOX was another example of this wedge breakout, which is now probably on a 45 degree. I don't know whether I would buy it here because you're getting a little bit, if you're buying this, it better be on positive trading, and you put your safety stop right here, because if it came back down through that level, it's telling you it failed to break out. Bingo, I don't know whether I'd be buying it here. No. This is one where you go back and say, all right, I want to look for charts that look like this or look like this. AMC. For some reason, that is moving up nicely. Didn't AMC used to be the bowling alley machines? Now it's the movie theaters. You stay long, but I'd put a safety stop at the 200. If it came back down through there, that would be telling you where people were deciding to come back out of that trade. NKTR, you can buy this one, but you can see you're in a choppy mode. So if you're buying, you have to watch to see if they can get it back up to the 200. So it's not a real trending stock. So you're just buying it to see if it can bounce back up to the 200. Fossil, cradle type pattern. No, that's more of that slow curve type pattern. That was a big breakout. Yeah, I don't know what you can do from there except hopefully look for a 45 degree off of there. Nokia, it's tough to trade because it trades overseas, but you can see the fry pan bottom breakout. I'd suspect the 45 degree also to continue on this one. If I was long, you stay long, and you don't want to see it trade back below today's open. CCIV. Oh. Yeah. That one won't come up over here unless I do CCIV. Now, that one doesn't come up over here. That's strange. Some of them have different symbols on different setups. So solo, nothing wildly exciting here yet. But you can still buy this on positive trading, especially if it comes up through this level. And Oxy has to open lower. We were short this one, but out of all the oils right now that are selling off, like Apache selling off and Marathon selling off, what puts on Oxy, and that's the only one holding up. So this one has to open lower tomorrow and trade lower to stay in it on the short side. I wouldn't be a buyer of this until it closes up above the T line. AMRN, you just stay long, use today's open as your stop. ATOS, another one you just stay long. Again, use today's open as your stop. That's kind of a little cradle or not, yeah, cradle J or a fry pan bottom. You can just stay long on this one, looking for the next target to be up here. Shopify, there's nothing there. You don't know which way this one is going to go, up, down, or sideways. So I'd rather move my money out of this, move it to some place where I can identify a pattern that tells me the probabilities are better in my favor. And a bearish left-right combo on Twillo, I'd be more apt to start getting ready to go short on this one. GE or JE broke out today. I would suspect right now they're heading for the 200-day moving average. And Clorox, you're not going to make a whole lot of money with this, but there's scoop pattern. I say you're not going to make a whole lot of money, maybe cleaning the virus off of everything. You can still be buying this one with the expectation that your scoop pattern is going to give you the slingshot effect, which is exactly what you look for out of a scoop pattern, is that slingshot effect. A high probability trade. This one's getting a little bit toppy. I would stay long, but I'd find some place where it shouldn't trade. It should be trading like this. I wouldn't want to see it traded all back below today's low. And OPK, breakout, you'd still want to be a buyer of this one on positive trading. Nikola, you could buy this one on positive trading. You can see what everybody else is watching. Supporting right here on the 50. Where do you think the next target's going to be? And ConocoPhillips is supporting here at the 50. Stochastic still heading down, which means it's probably not heading up, but it's probably supporting here. So if I was short and it opened positive and started trading positive, I'd close out the short position. These are homes. Stay long. Use today's low as your stop. Clean energy. This one you can get ready to buy on positive trading tomorrow. SENS. No, that's not a kicker signal. A kicker signal is too big. Somebody asked earlier. Kicker signal is too big candles. That's just more of a J-hook type pattern off the T-line. You could buy this one on Positive Trading or at least stay long as you stay above the T-line. And Netflix, nothing there. This was an example of you could stay long on this 45 degree as long as it didn't close back below this level, which it did. Now it tells us it's probably coming back down to test the T-line area. That one you stay long, you have your safety stop at today's open. That's AMCX. CLXT, stay long also, put your safety stop right here. But you can see you got kind of a J-hook pattern, so you pretty much stay long on this one. CHRS, good gap up breakout. Look for a 45 degree. When I say a good breakout, if they're gapping up, knowing that this is a resistance level, more than likely they're not afraid of that resistance level anymore. You can stay long on this one. And Marna, stay long. Held the 50, now gapped up. Next target should be testing these areas. Solo we did, right? You could buy this one on Positive Trading. I'd be more active to buy if it comes up through today's high. My stochastic setting is 1233, slow stochastics. And Guild, you could buy this if it opens positive. Kind of your J-hook pattern, almost a bobble breakout setup. This is symbol FST. You could buy this one, your best friend signal. Just watch you've got kind of there's your first resistance level, so you could buy on Positive Trading. And ADMP, this one's going to tell you what to do tomorrow on the open. If they open it lower, they're coming back down to test the T-line. There was another example that even if it's a $2 stock, that when they were that far away from the T-line, you start watching your 10-minute chart to see which way it was going. And ION SG, just stay long. You're in the overbought area. Safety stop right there. Look, they've gapped it up a little bit. You're getting up toward the top of this resistance level. I'd have a safety stop right here. Oh, we did ALT, right? That one, you stay long. It broke out today. Trade desk. You could go short. This is what you call a blue ice failure. Fell through the ice, came up, trying to find the hole it fell through, couldn't find it, selling off. That becomes your next target, the bottom of the pond. SGBX has to open positive and trade positive to stay in it. If it trades lower, it's time to take profits. You can see a lot of dojis up here. Now you have a doji sitting right above the T-line. It needs to stay above the T-line. NMDM, you get ready to take profits on this one if it opens lower. Look how far away you've moved from the T-line with a doji gap up. If this opens lower, you want to start taking some off the table. EXEL, you could buy this one. It looks like it's a piercing signal. You want to see it break this level, I'd rather buy this above today's high. Yeah, if this opens lower tomorrow, PGen, that's telling us we're still stuck in this direction versus trying to move in this direction. Would want to see this open, even if it opens slightly lower, immediately start trading positive. MRNS, fry pan bottom just up through the 50. You can buy this one on positive trading. There's a wee little teeny gap up here. Should be your first target. Suncor, stay short. Anytime you're in an uptrend and they could close it back below the low or the open of that candle, especially closing below the T line, it's telling you you're not going in that direction. You stay short. However, you're heading for the oversold area, but you're also trying to support on the 50. So you have to watch to see how that one opens tomorrow. XRT, the retails. It'll move in the direction of how they open this one tomorrow. And checked, you can buy this one on positive trading, obviously supporting off the T line after a left-right combo. VTNK, nothing on that one. We did Marna. Oh, I would doubt it. I would think that is your reversal. If they open this lower, at least they're probably coming back to test the T line on GameStop. Yeah, I don't think your stochastics are heading lower. Got kind of a big, long-legged, spinning top doji. Yeah, I'd just be prepared to close out a position if I was long. If you didn't close it out off your 10-minute chart way up there at the top. FedEx, nothing right now. Wouldn't be long or short. Just no direction. ONVO, nothing here. If you're long, it has to open positive tomorrow to stay in it. Boeing, if you're short, stay short. Another potential blue ice failure that could take you all the way down to the 200. And space, long-legged doji, if this opens lower, you got a long-legged doji occurring at the same level it topped out before, get ready to close out the position. Oh, Jim's got great timing. XONE is that scoop pattern that did a shooting star today. My safety stop, if I was long, would be right here. If they came down through there after gapping it up and doing a shooting star in the overbought area that far away from the T line, I'd get ready to look for taking profits. XLE, you stay short. GCO, you stay long, look for a 45-degree off of here. IVR, nice slow fry pan bottom, you stay long on this one. And TIGR tried to stay up. It's still above the T line, 3T line, but it did a left-right combo. Another one that if it starts trading lower tomorrow, I'd take profits. And that would probably also be a function of waking up and seeing if the pre-market futures are showing the market's heading up or heading down. iRobot, another one that just spiked and came back down. So easy to analyze. If they open it lower, they're bringing it back down. If they open up positive, that means the profit taking is over. PEIX, yeah, you could buy this one. It's not a very exciting looking chart. And Rite Aid. Stay long on this one. I'd probably use I'd stay long and use the T line. What do we say on? You could buy this one on positive trading. It's just not a very dynamic looking chart right now. Oh, AMF was bulling. All right. Let's see. LMND. Nothing here yet. It needed to see some more strength. Yeah, there's nothing there. Your stochastics are still heading down. You don't have any real confirmed buy signal. I'd try someplace else. No, it works over on the other charts. This chart service just has this as a different indicator. Kendai. Nothing yet. Not paying attention to this until you get the bobble breakout, meaning you close above the T line. We did Rite Aid, you just stay long. Okay, we're running. Yeah, CCIV it comes up on the other chart services. Plug, you stay long as it stays above the T line. And TLRY, right now, it has to open positive and trade positive if you're planning to stay long. If it opens lower, you close out the position. And Kodak. You could be buying this one. It's been using the T-line as support, fry pan bottom, bouncing off the 50. If I was going to be a buyer tomorrow, I'd buy it if it came back up through today's open. No, George, I strictly use the 1233. You can use a combination of, I used to use the 1233 and a 522 for trading the E-minis on a 1 minute, 1 minute, 3 minute, 10 minute combination. ENPH did a bearish engulfing at the same level it did a bearish engulfing. If this opens lower tomorrow, you close it out if you're long. Okay, oops, a bunch more. All right, these are the last few, or we'll be here till the cows come home. Apps, you stay long. BVXV, you could be buying this fry pan bottom on positive trading if it comes back up through today's open. If it opens lower, It's at least coming back to test the T-line. OBLN never got started after its big breakout. I would suspect it's still coming back toward the 50-day moving average. The T-line. And ZYXI, you can stay long on this, kind of your bobble breakout. NVTA, nothing. If this opens lower tomorrow, you close out the position. It should have closed it out today. For a long-term account, nothing wildly exciting there that I can see. Where am I? GBIO. You could buy this one on the expectation that if it comes back up to the 50, it's going to do a bobble breakout. This one's not coming up. Looking for gold. ECAH21. Gold, not really doing much of anything. GLBS, that one's got a bobble breakout potential. This one can be bought on positive trading tomorrow. And XLF, just stays short. Yeah, kind of a berry scoop pattern. Whoops. NIO, you can buy this one if it stays positive tomorrow. Means trades positive. And Workhorse, trading up $2. All right. That means watch to see if they can break out through this level. Okay, that's it. Would you consider secondary stocks to the EV industry? Charging stations will be in great demand. Yes, they're all on our list. Yes, everything's except right now it's not doing anything. Yep, so they're all on the list, but some of them are out of vogue. But there's some that are what do I say? They're some of them move to overbought positions and pull back. So that's where you use the candlestick charts. But the other aspect is that we're looking for things that have a breakout because of an announcement. Okay, that's about all we have tonight. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.